Hey guys, I want to talk about my Roth IRA portfolio. And if you don't know what a Roth IRA is, basically it is a tool created by the government to create wealth. And what a Roth IRA is basically your tax going in, so all the growth is tax free. So it's not like, let's say you had a traditional just 401k. Well, that money that you contribute is not taxed. So you might have 400,000 when you retire, but you still got to pay taxes on that money. Whereas if you had 400,000 in a Roth IRA, you still get 400,000, and basically whatever you contribute is going to be a hell of a lot less than what the growth is. So I think it's better to pay taxes up front than to have to pay them later on. But anyway, this is my, I like monthly dividends. This is my portfolio right now. I did have probably 20 companies. I trimmed it down. This is 60% of my portfolio, which is monthly dividends, and these are high dividend payers. Well, Maine isn't that high; it might be 5%, but this is real estate. This is kind of like this is my less risky bet. This right here is silver. These are I think they're called cover call ETFs or whatever. People bet that that, hey, I think it's going to go up next week or next month or whatever, and then the underwriters will get a premium, and that's basically where the dividend comes from. The premium when you write call. I don't know exactly that much about call options and puts and all that stuff, but I just know that you get a dividend. You get a dividend every month, and then this is oil, and then this also is oil. So you might say, hey, you're kind of over invested in oil. Yeah, you might be right. Maybe I should have added a fifth one or something, but like I said, I had probably 20, and I just went to 4, and then I have 40% in this Brazil stock, and so far I've got killed. I think I bought it at 14. No, I can't remember. Somewhere around 12 to 14 I bought it, and it went like down to 7. But it was at 25 sometime in the last year, so I'm hoping that, and I bought some more when it was at 7, so I kind of dollar cost average down. So if it goes back to 25, that's 3 times some money. Plus they pay a really good dividend as well. But this right here is mainly for my cash flow. So even if I don't put anything into my Roth IRA, the cash generated from these owning these securities will automatically buy more shares. And at some point in the future, I don't know, 2 years from now, 3 years from now, maybe next year, might go back to 25, might go to 50. I don't know. I don't know exactly, but I believe it will definitely go up. And some of the catalysts for that would be earlier this year they were planning to sell off a part of the company, which would have created the price to go up. But I believe the sale didn't go through. But I think I've told you before in one previous video, maybe not, but gold is around 2,000. I think gold should be 1,300, and I think silver should be about 1/15 whatever gold is. So silver, I think, is way undervalued. So I kind of like silver, but silver doesn't really produce anything. But the beauty of this covered call ETF or whatever is silver really does produce something. You can't get a return, and I want to say this thing is probably paying 15%. This one's paying around 30%, which sounds crazy, and maybe it is. But before the pandemic, the price was 20. And it fell to 5. So I bought it when it was 5, and now they did a reverse split, and it went like to, I don't know, $100 or something. But last week I think it was like at $75, and then it went to like from 75 to 85. But so I'm probably down 20% on this, but it's paying 30%, so you're really not losing anything. And this one was paying at least 10, maybe 10 to 12, somewhere around there. I mean, eventually, this is a trust, so eventually the oil will run out. But let's say mom and pop, bought some land, and then they, found some oil on their land, and then they sold the rights to like Exxon Mobil or somewhere like that, and they say, okay, for every gallon of gas I pull out of your land, I'm going to give you 10 cents. And it's, I'm sure that's not exactly how it works, but basically, you get kind of like in Alaska, for example. I don't know what it is now, but just by living in the state of Alaska, you get like a check for like $10,000 every year just from the oil revenue that they get out of their land. So it's something kind of similar to that. And we'll find out here, in a couple years if this was a wise investment or this was a poor investment. Like I said, right now on this one, I've been underwater. I'm down 50%, which which isn't too good, but they're also paying a really high dividend. But I'm not really too worried about it because, like I said, at some point in the year it was 25. So 7 times 3 is 21, and I think it would actually go higher than 25. So even at my initial price, I'll still double my money. And then when I had bought more, At 7, I should 3 times my money. So I'm down now, but I love buying stuff that's undervalued, and I really do think that this company is undervalued. Of course, I could be wrong. They are in the chemical business. They're one of the largest chemical producers in the world, and so they actually produce something. You know, like I said in one video, I really don't like financials because they really don't produce anything. I really don't like gold and silver because they don't produce anything. But this, but I do think silver is undervalued though. Like a couple years ago, I liked gold because gold was $1,100 an ounce, and I loved the gold mountains when it was $1,100. But you know, now that the price is 2,000, gold is 2,000. I mean, I think gold is too expensive. I think, like I said, I think the biblical price of gold, you know, for the last thousands of years has been, you know, around $1,300 an ounce. So, you know, you'll see some idiot on TV, you know, saying, "Oh, well, gold's going to 10,000, or gold's going to 20,000, or Bitcoin's going to 1,000,000." You know, it goes back to, you know, fear and greed. Fear and greed. I mean, if you know the value of something, it's easy to tell if it's cheap or expensive. I mean, I will talk about this in another video, but one company I had bought a while back that was a huge home run that had gone up 30x, although I sold way too early. I could have basically turned $5,000 into $150,000 in a couple years. I think I misspoke one time and said a year, but I think it was actually would have been a couple years. But basically, the company was. I thought the company value was $2 billion. They had $1 billion in debt, so I thought it was still worth $1 billion, and the market cap was $100 million or less. I think it had fluctuated somewhere between $170 to $100 million, and at that price, it was basically trading for the scrap value. So I mean, if you know what something is worth, it's really easy to make money. Like I said, you know, gold is, I believe, is $1,300. So when it's 2,000, that's expensive. And when it was 1,100, you know, that's cheap. So I mean, you buy at 1,100, you sell, if you still have it at 2,000, you sell at 2,000. You know, I mean, yeah, it might go to 3,000, might go to 4,000, but to me, that's, you know, you start getting greedy. I mean, if you truly believe maybe it's going to be 10,000, fine. But, you know, I think there's more gold on one little asteroid, and who knows, we might be asteroid mining in 10 years. So then gold's not going to be worth anything. But because then there's so much supply. It's all about supply and demand. But India is big on gold, so I don't know. We'll see what happens. But anyway, thank you for listening.